Welcome to another AriasWave market update. In this video, we're going to look at what's happened since my last update. And really, I haven't changed any counts or any labeling on this video. So we're just going to go over what appears to have happened and basically confirm the previous ideas across the board. So as I've mentioned many times, I don't look at one chart. It's never about one chart. It's always about the bigger picture. So starting with oil today, I can see that it's definitely starting to move lower. We never went back above the end of wave 2 at the red line at $97.80. So to me, that's pretty clear on this market's intention. And we had a sizable fall during the week. So pretty obvious there. If you wanted to take a short trade, the stop was at the red line, as previously mentioned. Okay, so just moving on now, I'm going to go to the Dow Jones. Okay, so I want to talk about this chart a little bit simply because of what I said is going to be in play here. And I did say we're in a wave D. Now, I still believe that we're still in a wave D, and I just simply think that we're in a wave D of a wave D. Okay, so we had a bounce A, B, C, and then this is a D of the B wave in brackets. So I do expect a bounce. I do expect something to come back up to, create a 5-wave move, but not going above any previous highs, such as the one from the 16th of August at around 34,100 roughly. Okay, so I still believe that we are going to see this zigzag pattern unfold. But given that the A wave is this length, the movement up that we see from here probably won't be that. It won't go as high. It won't go that high because we have to create the A wave. So the A wave being this length we will still need to see a bounce, but it probably won't go above the length of the A wave. Okay, so could it potentially come back up and retest this moving average here? I believe that may be the case. Basically, we had this move up that went above those moving averages, the 500 and the 1000, and then it basically came back down beneath it, and it'll probably go back and retest it before we complete the wave D. Will that be the final retest? I don't think so, and that goes in line with my longer term prediction that we're going to see basically a bounce at the end of this D wave for roughly November. Probably will be a month away. At this point in time, it seems that it's lining up pretty well. So I can't say that it's looking any different than what I've mentioned. Okay, so another look at the NASDAQ. The NASDAQ, this particular chart, probably this one here. Probably the same thing, I'd say. Very similar pattern is unfolding here. So to me, like I've said before, we're going to oscillate around this area for a while before we break lower. So it's not going to happen immediately. It's going to take a little bit longer to produce the pattern that's required to complete the wave 2 correction. So we're almost there. Wave D definitely has the characteristic of making it look like it's going to continue the downtrend, but then there's another move up that gives people hope, and then it wipes that hope out by reversing lower in wave 3. So this is critical and paramount to understanding the waves in terms of AriasWave, not in terms of other wave methodologies. Okay, so what's to say that the 10-year yield hasn't moved even higher? As predicted, the 10-year yield has definitely broken up above the previous high, which to me is a double confirmation that this is getting ready to launch higher. And we all know, as I've predicted for a while now, interest rates are going to continue to move higher, and we're only just getting started. Okay, as you can see, we're in a wave 3, or the beginning of a wave 3. So I wouldn't be surprised if we see larger increases over time and throughout the rest of next year. So that's definitely one to watch out for there, given that I've produced these ideas for quite a while and they're just coming to fruition now. So basically, that's in a nutshell what I see going on there. In terms of the euro, as I've mentioned, the euro still has a lot further to fall. So you're seeing it pick up some speed now. It's accelerating to the downside. It doesn't surprise me as much, but in saying that, it doesn't mean it's going to go down in a straight line. Okay. In the opposite is the US dollar, right? As you can see, this has been a very choppy move since the lows, and I don't think it'll stop being choppy until we get the end of a wave 2 correction, which I've yet to label here, but when I do label it, probably closer to when this thing's really about to explode higher, that's when there will be some kind of setup that will probably produce a long trade with levels, stop levels. However, given the volatility that's likely coming up in the next couple of months, I would say that, you know, this setup is the end of this corrective process is probably going to be a deep move lower and then a reversal to the upside. Now, could that be a retest of the breakout line, the area where it broke out from the previous high? I would say so, because that's a break of the wave E, and that would produce the cup and handle pattern required to really set this off. So even though it's looking like it's going to shoot straight up, these markets tend to not do that so much, especially when you've got moves that look like they're starting off with a zigzag pattern. They're usually part of something else, right? So at this point in time, I'm just keeping an eye out. There's opportunity around the corner, but yeah, that one's a work in progress. Okay, so I will put out a crypto update shortly, but hopefully you found this video interesting and informative. Thank you for watching.